Folks, welcome back to the Contrarian Trader. This is Robert Desmond. It is Saturday, April the 17th, 2010. Folks, what a shake-up day on Friday, huh? Goldman Sachs is charged by the SEC with fraud. Is there a surprise here? Really, is anybody surprised? I started the Contrarian Trader many years ago in an effort to help teach new investors how the market worked. And I take no more pleasure in picking out specific stocks that have been upgraded and showing and tracking them for a couple of days. Because after CNBC reports an upgrade, they never go back 2 days later and say, oh, how did that upgrade work out for the stock? And you see it spike. A couple of days later, you go back and you see that the stock declined and it's either at or below where it was before the upgrade. So completely self-serving. And people need to appreciate that these fancy pants folks that CNBC brings on TV are nothing more than slick salesmen. What they're trying to do is trying to sell you a perception. And that perception is that the market is going to continue higher. Now, on CNBC yesterday, all you heard were people, or these hedge fund managers or fund managers coming on saying that they've been reducing their exposure to equities for days now, as if they knew that the market was topping out and the party was over. All day, that's all you heard. Whether it be on the news, TV, what have you, all these fund managers are coming on saying they're reducing their exposure, or they're short, or they've been selling the financials. But if you reverse into a couple of days prior, everybody that was coming on TV, all these same hedge fund managers saying, oh, buy the market. Market's cheap. Forward-looking PEs are cheap. Money's coming in. We're at the beginning of a new bull market. And they're trying to get you in as the market's topping out. But then the day that Goldman News breaks, these same people are saying, oh, I've been reducing my exposure. I mean, it's absolute insanity that they're able to get away with this. Do you think CNBC calls these people on this? No. No. Do they have a vested interest in seeing the markets go higher? Yes. Advertisers pay more when the stock market goes higher because CNBC has more viewers. So it's a cozy relationship between Washington, the financial media, and Wall Street. They're all whores, and they're all in the same bed, and they all eat from the same trough. So once you're able to appreciate the fact that the game is rigged, you can move on, and then you can make money. Now, how do you do that? Well, you watch money flow. Money flow is one of the best ways to do it. This is a chart of the Russell 2000. Here, beautiful, beautiful money flow. This is a superimposed chart. If you look over here, money flow index. Money flow, this is from February. You had markets leaving, topped out about the same time. No divergences here. Market was leaving, stock market went down. We rallied higher here. Extreme overbought levels on the money flow index. Money started to leave, yet the stock market had a little blip here, but the stock market continued higher. This is what you call a divergence. If you can draw a trend line higher, you can draw a trend line lower on the money flow. The big money was leaving, volumes were declining, and the stock market continued higher. We were shorting this. We were buying short positions because we knew that the market was going to decline. That we were extreme overbought levels. Take a look at the VIX. Went down as low as 15. It could have gone down lower, but normally it doesn't. And sure enough, we had the spike on Friday. The market's extreme overbought levels. Take a look at the financials. This is the XLF. This is an index. This is not one individual stock. This is an index that hit a high of about 88 on the RSI. This is ripe to fall. And what did you have on CNBC? You had the thugs on Wall Street telling you to go ahead in here, buy the banks, and they upgrades on Bank of America because of this beautiful earnings that they came out with. Are you out of your mind? Are you out of your mind? You should be shorting this. This is a perfect opportunity to get short this market. Guaranteed, those thugs on Wall Street, what they were doing is they were telling the truth after the Goldman news was released that they have been reducing their exposure, unless they were stupid. But guaranteed the days before that they were on CNBC, they were absolute liars because they knew in their heart of hearts you should not be buying this market. So please, join the Contrarian Trader. Learn how these thugs operate. 14-day free trial offer. I don't want your credit card number. You don't like it. Sign on to PayPal and cancel it. But learn how this game is played or else you're going to get burned. Take a look at the chart of Goldman Sachs. This is why we use trend lines or support and resistance lines. Look where Goldman Sachs found support. I didn't just draw this morning. You can go back to my old videos of Goldman Sachs. This has been here. This is what we look at. We knew there's support here. This is a safe bet that we can go in here. You can use the intraday RSI on a 5-minute basis. This was an excellent day trade. 155.55 on an RSI that went down to 9. A 9. You couldn't lose money here. I don't care if they said they were going bankrupt. You're going to get an oversold rally. Sure enough, here's your oversold rally. Okay? You need to use charts. You need to watch money flow. So please, I beg of you, stop listening to these thugs on Wall Street. Do you have an account with Goldman Sachs? No. They wouldn't accept you. Now, Goldman Sachs is charged with screwing their own customers. Those people have an account with Goldman Sachs, and Goldman Sachs is charged with screwing their own customers. You don't even have an account with Goldman Sachs. Think about what they would do to you. Think about it. You need to be so careful, especially in markets like this, because this is not over. This is not over by any stretch of the imagination. I guarantee you that if the 11,000 level did not coincide with the support line, the lower band of the lower band of the rising uptrend line, if it didn't coincide here, and the fact that we had options expiration on Friday, we could have been down 300 points yesterday. Now, markets generally just don't go straight down. They'll consolidate sideways and then they'll roll over. So, am I predicting that Monday morning we could be down 300 points? I wouldn't be a bit surprised, but I wouldn't be surprised also if we had a neutral week next week. And because you still have earnings that are coming out. So, they're going to try every game they can to try and make this market move sideways and higher and get you to believe that the market is going higher. That way, the big boys can continue to reduce their exposure and get out. And don't forget my chart of the money flow. It's trending down while the market's trending higher. That's the big money leaving. You need to follow the money. If you don't play the game the smart way, you're going to get burned. So please, sign up for the 14-day free trial offer. If nothing else, subscribe to my videos, okay? And shoot me an email if you have any questions. Folks, have a very, very good trading week next week. One last topic. Watch out for interest rates. I wanted to bring this up earlier. You have the overall, this is an overlay of the S&P 500. That's this line here. Let's see if I can blow this up a bit. Okay, you have this S&P 500 line here. You see it's heading higher. Back in November, you had the utilities that were, this is the utilities, the XLU, that were outperforming the overall market. Why? It's because they had low interest rates. The utilities need low interest rates to, they need cheap money to help expand their operations, maintain their operations. And if they need to, if Treasury yields appear ready to go higher, then that means that they have to pay more on their bonds and more on their lending costs, and it hurts their bottom line. So you'll note that as the S&P 500 rallied higher, you've had a divergence. The utilities have rolled over, and they have not performed well with the market. They've underperformed, where they were outperforming here, where there was no threat of an interest rate cut. So please be careful, okay? The environment is changing. So again, sign up for the 14-day free trial offer. I'll talk to you soon. Have a great trading week. Bye-bye, folks.